Well, hello everyone. This is Matt Kerfman with a January 1st or December 31st, 2020 edition of Matt's Minutes. Welcome to the new year. I know many of us have been waiting on bended knee for this new year to happen. Leave a lot behind us in 2020. But before I jump into some information and a bit of a summary, I want to talk a little bit about the roller coaster of a year that many of us went through financially, physically, emotionally. 2020 was certainly a tough year. I and many of us at Richmond Brothers have been very fortunate to have stayed healthy throughout this year. We have heard many stories and talking to clients, having video conferences all across the state and the country about COVID cases that were anywhere from mild to extreme. We have certainly, within our Richmond Brothers family of clients, had our share of lost loved ones. And so, first and foremost, our hearts and prayers go out to you if you're watching this. And 2020 was certainly a tougher year for many than it was individually for us. So again, we're here for you. We're here to help you all figure out how to manage through and navigate all of this financially. And so that commitment continues into 2021 as we move forward into the year. So I wanted to give a brief history of 2020 with respect to the markets, and also this will help give everyone some context. But back in February 19th to March 23rd, roughly a 4-week window, the broad markets lost almost 40%. Now, to give you some context, 40%, that's a big number. If you had $1 million portfolio, you were invested all in the market, a 40% drop is $400,000 gone in 4 weeks. If you had a $500,000 portfolio, that's $200,000 gone in just 4 weeks. Now, that was also in the middle of when the pandemic was widely showing up and hitting the U.S. Not only was there fear and uncertainty and markets were crashing, we were afraid for our own health, our own safety. We were afraid to see other human beings, to embrace, to hug. So a lot of emotions involved in this outside of just money. So if we think back, what's going to happen next? When you're in the middle of that, we still have to help you make what we hope together are mutually the best decisions for your financial future as we move forward. So when you're in the middle of it, questions are, is it going to crater further? Is the pandemic going to roil out of control? Is 40% the bottom, or are the markets going to keep just free falling? And that's a scary notion. Usually with history as some context, having some balance in your portfolio, especially with how many retirees or near retirees we work with, main goals tend to be around making sure the lion's share of money is protected. If you're taking an income stream, that we're able to satisfy that income stream without really a lot of those chunks of money in market risk. And then lastly, growth. And so when you're working, growth might be more the main priority because you have a paycheck. So with all that going on, the CARES Act then passed March 27th, only 4 days after what turns out to have been the market bottom. And so markets have really tried to claw their way back up from those historic lows and that really fast whipsaw that we've all kind of went through. And so as we look at that and you look at headlines, I would just tell you everything is not as good as headlines tend to make them out. And so I want to address some of those thoughts and feelings. Some of this are questions that you have asked us individually, and I thought it'd be a good widespread communication path to go on. For example, if you said to us, hey, my portfolio doesn't feel like I'm getting market returns, or my portfolio might feel stagnant. Should we be doing something else? There's vaccines rolling out now. Should we be buying Pfizer stock? Should we be buying Moderna stock? All those sorts of things. So I wanted to give you some context. So everything in 2020 seems a little more backwards in a lot of ways than it should have been. And so, for example, Pfizer stock, the very first company to get an FDA approval for a vaccine with a very high effective rate. They began rolling it out, and believe it or not, everyone would think their stock would be going through the roof. Their stock was down 6% at the end of 2020. Doesn't make logical sense. Now, after Pfizer announced, Moderna came out with another vaccine, highly effective. Moderna is publicly traded. And if you look at the timing of when Moderna made that announcement that the FDA had approved it and they began rollout, in December, in just 2 or 3 weeks, their stock was at $170. They announced the approval, they announced the rollout, and the stock dropped from 170 to about 104 at year end. Only 2.5, 3 weeks later, That's a 38% drop. And you think, what in the world? Isn't that really good news? And I would tell you, yes, that does seem like it would be good news. But sometimes stocks and companies and markets don't always respond in the moment like we would think that they naturally would. As I break up the S&P and the Dow a little bit, I thought this was kind of interesting to give some context. And you may or may not know the S&P 500, 500 companies, largest and most widely held U.S.-based companies, and it's a market cap weighted index. And so what that means is the bigger value your company is, the more weighting you have on the return of that index. So you've all heard me talk about big names like Amazon and Apple and Microsoft and Facebook and Google. These are multi-trillion-dollar companies. This is the first time in all of history that there have been multi-trillion-dollar companies, let alone trillion-dollar companies. And so they carry a lot of weight of the market and what those benchmark returns are. And so what I did is, just to get some context, I pulled all of the components of the S&P 500 individually, and I looked at roughly half of the index. And half of the index, so I said, okay, what companies made less than 4% return in the 20, and what was that range? And it actually went from negative 58% up to 3.99%. That was 230 of the S&P 500 components. That's 46% of all those components really had not had a great year. And so there are a lot of sectors that did not really do well and struggled through the pandemic and the economic shutdowns and all sorts of things. Travel and tourism, the oil industry, medical, healthcare, for example. A lot of healthcare systems shut down access to outsiders. And if I also did an equal weight return on the S&P 500, meaning instead of the tech companies being the largest and being the best, if I said everyone has equal weighting in the index and ran an equal weight return and then removed just the top 50 companies. So really there's 450 companies remaining. The average return of those 450 companies was 2.9%. So I just want to kind of give you that context. The Dow was very similar. 50% of the companies in the Dow Jones had ranges between negative 35% and positive 2.5%. So the moral of the story is, really big tech companies and technology in general has really carried the market in the last year. And sometimes headlines can feel or make us feel like we're missing out. And really, when you get some context to it, that's not really the case, because it's very unlikely you would ever have all of your money 100% in the market, because that's a really choppy roller coaster to ride. So with vaccines rolling out, sectors like I just mentioned, healthcare, medical, for example, travel, tourism, it may not be, January 5th or 6th, but I think certainly throughout the year we should start to see those opening up, provided the vaccines are successful. And in the end, we think it's real important still to manage your portfolio towards your own risk tolerance, towards your own retirement income plan and what your goals are. And just because something didn't perform like the S&P 500 or the broad market, it doesn't mean that that investment is bad or poor, or that 2021 might not be a really good year for some of those holdings. And so I just wanted to give you that context and break out some of the components of the market so that we all had a better idea of what actually happened. And I'm sure all of us want to kind of look back and have 2020 in the rear view mirror and forget about it largely. But there are a lot of really good lessons I think we all learned in 2020. And hopefully we can positively carry those forward into 2021. So this has been a little bit longer, Matt's Minutes. So I will sign off for now with gratitude, and wanted to reach out, let you know that we are still all here as a team, working for you to help you navigate through all of this insanity and chaos and sometimes uncertainty. If you have any individual questions, feel free to reach out, questions@richmondbrothers.com. And I will continue providing these updates at a minimum on a monthly basis throughout 2021. And stay healthy, stay safe, and wishing you and yours a healthy, fun, happy, and hopefully prosperous 2021. Thank you so much for tuning in.